Good evening, everyone, and welcome to another fascinating topic for the Hub. We are so grateful for you joining us tonight. We have the pleasure of having another amazing professional here to shed some light on another amazing topic tonight. Now, the Hub is where we discuss health, finances, community, education, and also politics. So I invite you to go ahead and join us monthly as we will have topics on these various topics. This is where ministry and community connect. Now, I am Tremaine Brown, and I have the pleasure of being your host tonight. And we have a phenomenal segment planned for you. Our special guest tonight is Deanna Daniels, and she is the CEO of the Daniels Touch. Now, let me just tell you about this amazing professional. Deanna Daniels, MBA, is a tax professional and business owner that's committed to helping individuals and entrepreneurs understand the tax system and leverage it effectively. She was born and raised in Hampton, Virginia. She has earned degrees from Thomas Nelson Community College, Old Dominion University, and also St. Leo University. Deanna provides tax preparation and advisory services, along with bookkeeping, business startup support, and consulting. She is also the owner of a travel business, further reflecting her entrepreneurial spirit. She is deeply invested in her community and volunteers her time and expertise as the Director of Administration and head chair of the Community Service Board for the Collective Performing Arts Center. It's a local nonprofit organization. She is passionate about community growth and is dedicated to seeing those around her thrive. So, with a strong emphasis on education, compliance, and strategy, Deanna simplifies complex tax topics, empowering her clients to make informed and confident financial decisions. She is known for her down to earth approach, practical guidance, and unwavering commitment to financial literacy and community empowerment. So, she is the perfect candidate for our conversation tonight. So, this evening, we are going to be bringing you insight into tax laws that can help you manage your hard earned money more efficiently. So, please help me welcome Miss Deanna Daniels to the Hub.
Hi, everyone.
Yes, thank you so much for being our guest tonight.
Thank
Wow.
you for having me.
Yes. Now, Deanna, listen, you guys need to pay attention to her logo and how she has presented her company because it is beautiful. I love it. I love it. I love it. So we only have a few minutes with you tonight, but I definitely want to pick your brain as much as possible because we want to help our guests tonight really make sure that they don't miss anything with this upcoming tax season.
Yes,
So,
ma'am.
Deanna, can you briefly tell us what you do and who you typically help when it comes to taxes?
As my bio stated, I'm a little bit of everything. I did receive my MBA from St. Leo in 2020. And what's funny is my ultimate goal was I like being a leader. So I wanted to just make my way up in somebody's company. I didn't care whose, I didn't care what, just be a leader.
Okay.
So with the company that I currently work for, there was some uncertainty about me keeping my job over the last year.
Mm-hmm.
So we actually have started looking for other work. And as you all know, it's hard to find another job nowadays. So I had been looking into doing taxes for years because I've been doing my own. I understand business, all those things. So I was just scared to step out on faith, honestly. And when this happened, I was just like, you know what? It's time. And I started looking into the bookkeeping because I already do these things for the nonprofit I've been with for the last 3 years.
Okay.
And so I said, okay, let me just go ahead and do it. So I learned how to do the bookkeeping. I started learning more about the taxes, trying to see what I didn't already know. And I said, yeah, I started looking around and I started noticing as I've been learning and talking to people, small businesses need the most help because they don't really understand. Like, what I like to say is, people go into business for what they love, but they don't understand business. And that's why I'm here. So I
Cool.
try to be that person for them for guidance. So that way, when they do come into those situations where they're like, oh, I don't understand this. Who do I talk to? I don't know where to look. you can
Mhm.
come to me because if I don't know it, I know somebody who does. So I
Good.
have resources all around me. I have CPAs behind me. I have other business consultants. I have other tax professionals. I have um I have business funding people, credit builders, credit repair. I have everything around me. So I'm really out here trying to just help people put themselves in a good place. So, most of these people, they want to leave a legacy for their family. So that's what I'm trying to do for them. So any
Wow.
small business, any person who just really needs the help, I'm here for them.
Excellent. Well, you said a few things. I'm gonna make sure we do a follow-up call. Yes, gotta check in on that. So, what's the biggest misconception that people really have about taxes?
So, the biggest thing I've noticed just in the last month,
Mm.
everybody is due a refund.
Mm.
So you get people who get upset and they like to hop around through different tax preparers because they think, oh, this person can get me more. Oh, this person doesn't know what they're doing. But the thing is, they're not understanding how taxes will work. So they automatically think when it rolls around, they're going to find somebody who can magically do that for them. So
Hmm.
that's one thing I have had people ask me about, and I've explained to them how taxes actually work.
Right.
So that's probably my biggest thing.
Biggest misconception, a big check is on the way. Wow. So have you seen that, especially now with a lot of the changes that people are afraid, overwhelmed, like what has been kind of the presentation?
Definitely. And the biggest thing when it comes to that, it's funny you ask because since the last month, I've noticed because now, ever since COVID, the IRS has been going through backups and it's just been so many issues. But now they're finally getting back on their feet. And so they're starting to catch up with the things they've missed. So I've had people contact me because they're anywhere between 3 to 5 to 8 years behind on filing.
Whoa.
And so they are super afraid because now I have one person who actually came to me because they got a letter from the IRS that they
Mm.
owe $15,000 because they had not filed anything. They are self employed. So I told
Oh,
this person, I said, yeah, don't worry about it. Just, what does the letter say? Is there a date? Things like that. And just trying to get them to go back to that year, start from one year, figure out what you spent for that business, and we can work it out. We can get you filed and we can get that number down. So I think the biggest thing people are scared of is when they know they haven't been filing. Because I think I may have at least 10 people and
wow.
they just haven't been filing and now they're scared because they realize the IRS is actually coming for people.
Right.
Between that and people who have had fraudulent returns filed,
Hmm.
they're realizing, oh, they're actually looking at this stuff.
Right.
So those two things definitely in the last month have picked up.
Wow. Yeah. Make sure you all file your taxes.
Correctly.
Right. So with that, like, what are some common mistakes that you see individuals make year after year?
My favorite would have to be, oh, I had like 3 jobs last year. So yeah, I got a couple W-2s. I did Uber, so I have a 1099 and they bring me it. And then they're like 3 days later, oh, I forgot. I have one more 1099 I gotta give you. I'm still waiting for it. Thankfully I didn't file you yet, because then we would have to do an amendment.
Right.
So I notice a lot of people with a lot of different job hopping and different side gigs and things like that, they tend to not keep up with how much they're doing. And so they
Mm.
don't really remember how much they're expecting to see come in the mail, how many documents they really need to file and things like that. Um, the other thing would definitely be self-employed individuals. I've had a few of those, and they're
Hmm.
not, this also includes like things like Uber drivers and things like that.
Okay.
They're not fully aware of what is deductible as a write-off. And so, like, you have people who drive Uber and they don't keep up with their mileage that they're driving. You can deduct some of those mileages off. So they're not keeping up with it. I can't write it off because I don't have any valid information. And
Mm.
then you have your regular business owners. They're not properly keeping track of income and expenses. Sometimes you can clean that up, which is why I do the bookkeeping. So
Hmm.
it just takes a whole lot and it can be very expensive. So it's really important that business owners remember, like, if you need help keeping up with your books, reach out to somebody. Like me
Hmm.
personally, I'm trying to be very affordable for people, so I'm on the lower end, but they definitely are not keeping up with anything. And thankfully, nowadays we have these different websites like Shopify, or we have Square, and all these different websites that are keeping track of those things for them. And so I
Right.
just tell them, if you have that, let's start there and figure out where the holes are. If you are using Cash App, keep track of your statements. And if you're not keeping your business funds separated from your personal funds, you got to start doing that too, because that makes it harder to keep up with too.
Wow. That's a lot. Right.
Yeah,
So everybody who has all these different ways that you're making income, so you're going to need to make sure that you have a way to prove what you've earned, right?
definitely. Because you can enter what you want in the system. Like I
Hmm.
talked to somebody the other day, they wanted me to file them. They said they babysit,
Hmm.
cash business, no records. I said, I'm sorry, I can't file you. Because if
Wow.
the IRS audits you and you have no paperwork, guess who also gets fined because I didn't have any paperwork.
You.
So
Wow.
if you get a refund based off of it, you'll owe that money back because you don't have any paperwork proving it.
Hmm.
So definitely very important.
So what kind of paperwork do they need?
It definitely depends on what they're doing. So, like I said, with like a Uber driver or DoorDash, I know DoorDash doesn't necessarily track the mileage the same way Uber does. I believe Uber sends like an end of year report on how much mileage you did during your drives, and
Okay.
you just need to keep a record of that. If you don't have a way to track it, there are plenty of mileage tracking apps that you can download from your Play Store, and all you do is track your mileage from whatever store or restaurant you're going to, and all the way to the person's house. When you deliver, that's when you stop the mileage. Because it's
Okay.
only from the point that you're delivering from to the point that you're delivering to. Anything besides that is considered commuting. And us regular folks with regular jobs, we don't get paid to drive to work. So
Mhm.
definitely you gotta have all that, because if they happen to ask to see, where you were driving and things like that, they're gonna want to know. So things like that. When it comes to like someone who does hair, you want to make sure you're keeping receipts for all the hair you're buying. If you're
Mhm.
cutting grass, keep receipts. If you got to get your lawnmower repaired, things like that. I have a bookkeeping client who has a transportation business where they rent out cars. You
Mhm.
need to keep track of, if something happened to your car, you need to keep the receipts for getting it fixed. Anything that's solely under your business, you need to make sure you're keeping track of. And those documents will help, give you a leg up when the audit comes. Now, I'm not saying you're always going to get audited, but you never know. And so when you
Right.
have those things right there, you don't have to go around looking like, oh my gosh, I don't have anything. Because a lot of these things you're going to have on paper. And so uploading it to drives as well, like that helps because it keeps it electronic for you just in case something happens. But definitely every little bit of proof that you have that you use funds strictly for the business, that's what's going to help you in an audit.
Okay. So how about those who like volunteer? Are there things that they can write off?
Yes, there are. Usually when you volunteer, you get put you're going most of the time it's if you volunteer with a registered nonprofit. So like the nonprofit I work with, we're registered. So anybody who comes to volunteer for us will be able to fill it out on paper, and we can say, okay, this person came here. Basically, you find out where they lived at, find out where they had to go, the different things they did, if they gave money. So the first thing would be the gas you spent or the mileage you spent to go volunteer somewhere.
Okay.
That's a write off. If you donated money, like we're all in church, if you give your tithes and offering, that's volunteer. You're giving a donation. You can
Come
write
on.
that off.
Yes.
If you if you're doing things for the church, like if you're a secretary for the church and you don't get paid, ask the church to write you a letter based on the actual the the rate of pay, the standard rate of pay for that job. See if they'll write you a letter and you're donating services. That's volunteering. So looking
Okay.
at things like that, it just definitely it varies. Now the only thing is because most of us fall under what they call the standard deduction. If you're not doing things that would kind of exceed past that standard deduction, then
Mm-hmm.
there's no point of really writing off these things. But that's why it's important to talk to a tax professional if you don't understand it yourself, because they'll
Okay.
let you know, oh, you got this, and this. You're not beating the standard deduction. So let's just go with the standard. And then if you do beat it, they'll let you know how much you beat it by.
Okay. That's good. Wow. That's a big deal right there.
Definitely.
That letter. Going to have to go back to that. Okay, excellent. So we have all these different ways that people are making money nowadays because of, employment issues and job hopping. What documents should they show up to your office with prepared to file their taxes?
Well, that can vary because not all tax professionals operate the same way. Now, like I said, what we do, our job is to take the information you give us and process it.
Mm-hmm.
If we feel like something is off, we're supposed to ask the right questions, do what we got to do. If we believe you're correct or you're giving us true information, we just fill it in. Now,
Okay.
as far as I operate, because I cover my trail, like I said, things like receipts and stuff like that. On top of that, it would be the basic level for anybody would be your depending on your tax situation, first of all. But for
Mm-hmm.
regular person, it would be things like your ID, proof of citizenship, proof of your residency, proof of your
Okay.
income. So your W-2s, 1099s. If you have 1098s because somebody went to school, if you have 1095s, any type of tax form that you got from the bank, like mortgage interest, things like that. If you have like proof of citizenship, but just you showing your ID. That basically, if you have a social security number, that covers that aspect. And so
Okay.
sometimes we'll ask for a copy of social security card. If you don't have one, just give us the number. If it's not true, it'll reject anyway. So
Right.
we trust y'all with that information typically.
Mm-hmm.
Um, Other things, if you're filing dependents, you would need their information, their social, their birth certificates proving that you're the parent. If you're not the parent, you can prove they live with you. If it's somebody you're taking care of, you're paying more than 50% of their cost of living. You just
Okay.
have documentation showing that they live with you. Um, Other things such as school documents, custody documents, business people, your business license, your like I said earlier, bank statements, just showing what your income is coming in, the stuff that's showing what's coming out. So that way we can match your receipts with what's coming out of your account. Things like
Okay.
that. It really does vary based on your specific information.
Wow. Yeah, that's a lot of stuff.
Yeah.
So with the different like status changes, let's say that people get married or get divorced or have a child or buy a home, what does that do to their tax situation for like this year that's coming up?
So generally speaking, the IRS looks at whatever your status was on December 31st of that previous year. So
Okay.
if we're doing 2025 right now, were you
Hmm.
married on December 31st? Were you single on December 31st? Did you have,
Hmm.
even if you had a child born on December 31st,
Okay.
all of that, it counts for the whole year. So you have some situations where you have some people, they're married, happily married, live together, but they choose
Hmm.
to file married separately. Technically, you're not supposed to do that, but there
Hmm.
are certain situations, like if you live in two separate households,
Right.
if you lived apart for more than 6 months of the year, So it's the only thing about it is the deduction is not as high as if you file together.
Okay.
So that is a big advantage between married filing joint and head of household. Those are the two highest deductions you can get. So having a child, if you're single and you have a child and you make over a certain amount, that puts you in the place to be able to be like, okay, let me file head of household and I get this higher deduction.
Okay.
Whereas if you make below that number, you would have to just file single. You can still file the child, but you still have to file single and it's a smaller deduction. Um,
Okay.
buying a home, it doesn't affect your any of your statuses for filing, but like I mentioned earlier, like if you have interest on your mortgage or you're doing things like updating, you're getting like solar panels or something like that. Things
Hmm.
like that can be write-offs, but again,
Okay.
like I stated before, if it's not as high as a standard deduction, it doesn't matter anyway. So it definitely is a case by case basis for sure.
Gotcha. Understood. Yeah. It seems like there's just so much to learn. Every time you learn something else, it's
Yes,
something else.
it changes every year. So definitely.
So is there a threshold for all these freelancers and like people who are just maybe earning an income for onesie twosie things? Like what is
So
like what?
typically the number changes every year.
Mhm.
I know like if you're somebody who just makes money for yourself and say you only made like $300 in a year, that's not
Mhm.
something that's really taxable.
Okay.
If you're working a W-2 job and you make like $10,000 that year, not taxable. The
Okay.
threshold is more like I know the lowest level of taxing is anything up to about 15,000, somewhere
Okay.
around there. I gotta remember the specific number, but it, like I said, it changes every year, and they look at it a little differently when you make such a low amount. And so, typically, like I used to work at Busch Gardens, so I was making probably making about initially less than 20,000 a year. I just can't remember
Mhm.
what it was. And at the time, of course, taxes were automatically being taken out. But by the
Right.
time the end of the year came and I went to go file, I ended up getting everything I paid in taxes back. I
Oh
didn't
wow.
file any deductions or anything like that. Like my son, he was
Hmm.
getting filed by his dad. So I didn't have any deductions, any exemptions, nothing. They just gave me all my money back, exactly what I had paid out. So it depends. If you're making like if you're self-employed, then the self-employment tax right now is 15.3%.
Hmm.
So say you're getting taxed for a W-2 job, but now you got to enter your self-employment information. Don't assume that the taxes are going to come out the same as what they did for your W-2. So that's going to
Right.
be calculated a whole different way. But like I said,
Okay.
that limit, that minimum for self-employment is very low. So
Hmm.
they're going to make sure they get their money. um, typically anything, I know a lot of people saw when Cash App started doing the whole if you got paid over $600, we gotta report it to the IRS, and you start getting a 1099 and things like that. That was one of those things that had went into effect. So it definitely depends on exactly what you do. If you're doing a 1099, if you're working for yourself, yeah, it just varies.
So somebody who's working for themselves should file a tax,
They
right?
should.
Should file
If
taxes.
they made over that 400, they definitely should. And like I said, it changes, so it could be different next year. But
Okay.
they um they would go in because of course taxes aren't being taken out. They're responsible for it. And
Right.
they have the option of typically the IRS wants you to make quarterly payments. So that means every quarter you calculate what you made, figure out what taxes you think you should pay it. You set up an IRS account and you're able to go in and make those payments. So whatever you made from October to December, that would get paid by April 15th. Whatever you
Mhm.
pay from January to March, that would get paid by July 15th. So it's just keeping up. Another thing, another reason it's good to have a bookkeeper or a tax professional by your side because we know how to calculate things like that.
Yes.
So like I'm working with my client now calculating his taxes. So
Mhm.
that's definitely something. And if you don't do it, you just end up having to pay it all out of pocket when tax season comes around.
Wow. Well, that could be a nice little bill. Oof.
Definitely. And penalties for
Yeah.
not doing it ahead of time. So
Oh, okay. All right. Freelancers, take it.
definitely.
So I know a lot of small business owners. Um, just from your expertise, what's like the biggest tax mistakes you see small business owners making?
Definitely the improper bookkeeping and tax planning.
Hmm.
Because, like I said, a lot of people they don't realize that it takes all of that. Like they think they can just sell, 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 work, 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 and then when it's time to look at their books, they're confused.
Mm.
Or it's time to file taxes and they don't know they can write stuff off. Like I've spoken to at least 5 business owners in the last month where when I have a consultation with them and I ask them all these questions to figure out everything that I need to do for them, everything that I need to ask them for, like all these different things that could possibly pop up for their type of business. And the number one question I ask, do you have a home office? And they're like, well, yeah. And I'm like, have you ever written it off before? Like, do you solely use it for your business? Yeah, it stays closed and it keeps this, that, that. And I'm like, and you've never written it off? No, I didn't know I could do that.
Wow.
It's just like having a physical office that you leave out your house to go to. You just have to make sure, if it's solely for business, you calculate that amount out of what you're paying for your house.
Hmm.
Or even if you're just using a section of the room, you can calculate the square footage of that area and subtract that from your business taxes. So
That
different things like that, they're just not informed at all, like on the business aspect of what they're doing.
right. So, like, what are some things that are universal that business owners and even some churches, nonprofits can write off?
Well, nonprofits, I wouldn't say is so much of an issue because they're nonprofits. They just
Mhm.
have to, submit their form every year that shows what their money was coming in, what their money was going to, just to
Okay.
show that they're actually operating as a nonprofit. Now, writing off is basically trying to get down your tax liability.
Hmm.
So that's, like I said, nonprofits don't have to worry about write-offs per se.
Well, that's
But
good.
if they did happen to do something that was out of the way of the nonprofit, then they would just have to have evidence of why it was done so that they don't get taxed for it or that they don't get penalized for it. But
Okay.
as far as, us, as individuals and businesses, it's really just understanding what a real need is for your business and what you're spending on it. Paying attention to, oh, yeah, I use this for the business. Some people get a business phone and don't even think
Mm.
about it. You're only using it for business. You have a personal phone and you have a business phone right off the business phone. If I go today, like I have one phone and I'm using Google Voice for my business number. It's awful.
Mm.
It's awful because you're trying to keep up, but eventually I plan to go ahead and go drop $1,000 to get me a business phone.
Yes.
That's a business write off. It was a business supply. So it's
Right.
just remember to think about what you're doing for your business. Every little thing. When you think, oh, I need this for my business, remember that. And remember that is something that can be written off.
So with write-offs, are we trying to get to zero?
It's
Like,
not that you're trying to get to zero. Like, yeah, of course, you don't want to have to pay a lot of money out, but to get to zero for self employment means you made no profit. And that's not what you want to see.
that's
It's just trying to minimize how much you're paying in tax because you don't
that's
want to get on tax. You don't want to get taxed on money that went back into the business. It's not
right.
fair. It's truly not fair. So the only thing you're trying to be taxed on is your profit, the money that comes back to you at the end of the year. So
So you
that's
have to have good profit loss statements.
Yes, yes, exactly, exactly.
Very good. Very good. Woo! Business owners, get it together. Listen. Wow. That's a lot to consider. So how about the vehicle and mileage? If you have one vehicle, are you able to use that as
So, say you have, I know a few people, I'm sure you know a few people in the area, they sell food. And
hmm
they may say it's gonna operate the same way as Uber and Lyft, things like that. They do
Okay.
deliveries or they gotta go get items, they're working in their car right now.
Yes.
You have to, there's like a mileage rule you can follow, or you can use a percentage rule, percentage of use. So you have to really just keep track. Like I said, the mileage option is the easiest option because you can
hmm
just turn on that mileage tracker and keep track of it that way. And you save, like right now, it's like 70 cents a mile. So
Oh
you can
wow, it
write
went
that
up.
off.
That's
Yeah.
good.
Yeah. And so all those business miles you calculate and you write that off. Um,
I remember getting food delivered to my house from somebody. So their journey from where they made the food to bringing it to
Mhm.
me is a write-off.
Yes.
Woo.
Yes. They were working in their business at the time that they were driving to your house. So that is part of that.
Wow.
Um,
Okay.
and then like like I brought up before, my client that's doing transportation, his cars, I had to tell him because I'm trying to teach him to keep everything separate. Like he just made his business legal in September. And
Oh
so
wow.
I've been guiding him since October on how to separate everything.
hmm
And so I told him, I said, these cars are only for business. You rent these cars out monthly. You never drive them.
Right.
They don't need to be under your name. They need to be under your business name. So that way,
hmm
all the payments you're making on those cars, everything that you're fixing on those cars, that is business property. Those are business expenses. When something breaks down and you don't have a car for these people to drive, they can't pay you. You need to make sure you're keeping track of this stuff separately. So
Okay.
that's the one difference. If it's something where you're like really out here renting cars and they're solely for business, then yeah, you write that car off. But if it's side gig work, or if you, even if it's your main business and you're using the car for both personal and business, then
hmm
you have to separate those things. But if it's solely business, definitely huge write off.
Wow. Okay. So I remember reading something that there was some weight, some cars that are, I guess, a specific weight that you can write off. What does that mean in tax language?
Honestly, I haven't come across that yet, but you know how you have a regular car, maybe a certain number of tons, and then you have a big rig. So you might have certain limits, and I actually wouldn't mind looking into that and getting you an answer. But
Okay.
you probably have a certain level of what you can use, and it might also depend on what type of business you have, whether it's an LLC, corporation, things like that. If you're like completely self-employed, as in not incorporated, you don't have a business license, just a sole proprietor, it could
Yes.
depend on that. So I definitely would love to look into that for you.
Okay, yeah, that I was like, now you one question like just opens up another, like
Yes,
it's a lot to this. Wow. So personal and business finances definitely should be separate.
completely. Hmm.
So somebody who's 1099, like, do they have to go get the whole LLC or can they
Oh
be
no, no.
supervisor? Like,
1099 just means you're not an employee. So
okay.
if you are working Uber,
hmm
it's not your own business. You still are working for Uber. You just get to determine how much you work for Uber. You have
Right.
to use your own vehicle. You have to use your own gas. You're still your own employer, but you still work for Uber. So those things are separated. If you were to work for, let's say, Amazon
hmm
gives you your own vehicle. You don't drive your own vehicle unless you're doing something like Amazon Flex. That's when you would get a 1099. But if you're an
hmm
actual Amazon driver in their vehicle, you're getting a W-2. So
Right.
they're the same type of situation, just different benefits. So
Got you.
the only time you would actually want to keep it separate would be if you really have your own business, because a 1099 is just another form of regular income. So it's it's not that much like being self-employed.
Got you. Yeah. Oh, this is a lot of paperwork.
Yeah. Now, if you're doing sales and things through like Square,
Mm-hmm.
if you're getting something from Cash App, that like if you have a business Cash App account, things like that, yeah, that type of stuff will still come on the 1099 as well.
Right.
And that would be the one situation where it's like, okay, if I have an LLC and I'm taking payments through these websites, yeah, I'll still be getting 1099s. But it
Mm-hmm.
definitely depends on what type of business you're operating, what form you're operating in. Because, like me, I don't have an LLC. I plan to start one later on. But right now,
Mm-hmm.
I'm just a sole proprietor because what
Yes.
I do does not require a business license.
Okay.
Yeah, so it definitely depends on what goal you have for yourself and for your business, how you set that up.
Got you. So you said a lot with like the different things people should be tracking. So if they don't do this stuff, does it automatically trigger an audit?
No, because if you think about it, the government doesn't know what you're spending money on.
Right.
They don't
Okay.
know, what expenses you're having for the year. All they see is the money that you made. So,
Hmm.
like I said, if they see you made this much money and you didn't write anything off, they're going to tax you 15.3% on the whole amount that you made.
Okay. I
They
got
don't
you.
know. Oh, well, they had to pay for this. They had to pay for that. So it's not their job to look for that. They want to keep your money. So that's why I said it's so important to do your own due diligence for sure.
So yeah, you have to be strategic then.
Mhm.
So is owing taxes like a good or bad thing? Like how should we?
It's neither this nor that. Um,
Hmm.
because you may have someone who I see some people who only owe a couple hundred. Okay.
Hmm.
And then you have some people who owe thousands. So the higher amounts, that's not really good. It shows that you underpaid your taxes. Uh, some
Got you.
people I've noticed the W-4 has changed recently, and
Hmm.
I noticed a lot of people not realizing what they were doing on their forms have marked themselves exempt, and so they went all year without paying taxes out of their paycheck.
Ooh,
So now they're coming to file and they're finding out they owe money. Like, and they're just like, what can I do? But there's nothing you can do. You went exempt. So now you owe them their money.
got
So
you.
it's definitely, make sure your W-4 is correct. If you're a 1099 or self-employed, you make sure you're making those quarterly payments or at least keeping up with what you're making so you can start saving and putting money to the side so you're aware, okay, this is how much I'm gonna have to pay come tax season. Let me make sure I have it ready. But definitely don't let yourself get caught off guard because yeah, owing it just shows that you're not doing what you're supposed to do throughout the year.
Okay.
Just as long
Got
as you pay what you're supposed to pay,
Mhm.
get your penalties paid and whatnot, you won't get in trouble. I promise. Just go ahead and handle it. They
All
do
right.
payment plans.
Yeah, I bet you they do. So these penalties though, like the penalties, if you don't do it quarterly, you get penalized. Is that what you're saying?
You can. It states that you can. It doesn't necessarily say you will.
Oh, okay.
Yeah,
Got
so definitely it depends. Like they have this thing, it's called a penalty for
you.
underestimated payments. So it definitely I haven't seen it happen yet. So I guess it also may depend on how much you underpaid.
Right.
So
So basically, if you're doing business, you definitely should at least consult with a tax professional.
definitely. If you don't know what you're doing, talk to somebody.
Right. Now, I want to kind of switch gears because I'm also dealing with people who are actively touching their different retirement accounts. How do those different retirement accounts impact taxation, if it does at all?
So, starting out, let's start from the beginning. Where does a retirement account come from? When you work a W-2 job, legally, most of these big businesses, they have to give you a retirement account. So,
Mm-hmm.
most people have the money coming out of their paycheck. Typically, the minimum is 3% contribution rate. And your employer usually matches it. Not all, but most do, depending on how long you work with them. This money
Okay.
goes into this account every paycheck. That money is sitting in investments and it's rising and rising. The goal of retirement accounts is so that you can take care of yourself when you retire. You're not working.
Right.
Government funds, things like that, it's not enough for you to take care of yourself. So that is the ultimate goal. Now, you have some people where I've had to do it before. You go and take out money from your retirement account. Now, majority of these types of accounts, mind you, I work with retirement accounts right now at my current job. So
Oh, nice.
I see a lot of this happen. But a lot of these accounts, they'll have rules where majority say if you're under 59 and a half and you still work for the company, you can't take the money out at all because you're under retirement age. That's the law. And so they'll base it on that. Some of
Mm-hmm.
them may have certain rules where, special rules where it may be like 55. Or if you're doing a phase retirement where you're slowly branching out into going into retirement, then they'll let you start taking certain amounts out. When people leave their jobs, that money becomes available because they're no longer in service.
Okay.
Some companies here and there, they will have plans that still restrict those funds. It just depends on the company and how they set up the plan. Now,
Ooh.
what happens is you may have someone, okay, let's see, say I'm 20, 25, and I go in and I'm like, I need this money for something. Let me just go pull it out my retirement. It's available. Well, now, not only do I have to pay, usually it's a 20% tax, but I also have to pay a 10% penalty because I'm underage.
Right.
That's more
Oh,
money coming out of your funds because you're not supposed to be pulling from there. Now,
right.
if you have a situation like a hardship and your company allows you to pull, that this is also another law. So, like, say you're purchasing a new home and you need funds to help go towards a new home, then you can go take out a hardship request. That tax is only 10% instead of the standard 20. So it just varies for the reason you need it. Um, those you would have to still be in service for. Um, typically, if you're terminated, like you don't work there anymore, you just have to take a regular withdrawal.
Okay.
But you don't get that underage penalization because that falls under a hardship request. So you're only losing 10%, whereas in the other situation, you were losing more like 30%.
8%. Ooh.
Um, if you are of retirement age, then of course, anything you take out is fair game. All you're paying is that little 20% tax. If
Mm.
it's depending on the type of plan it is, it may be a 10% tax. When you get to age 72, you are required to take out what's called a required minimum distribution. And so it's just the government making sure that retirees are taking out monthly payments and taking care of themselves.
Right.
And so that only has a 10% tax rate on it. Um, if you have IRAs, like an individual retirement account, you got some people who'll make outside accounts with like Edward Jones and companies like that. And that's your own personal account. It has no tie to your employer. So those rates, you take out money, it's only a 10% tax. So anything that doesn't fall in that unattainable amount that you're pulling from,
Mm-hmm.
then you get a lower tax rate on it. And then when you're adding contributions to these IRAs, or say you have like a health savings account for like if you need help with bills later on, you're
Mm-hmm.
setting an account to put money aside for that. Accounts like those, the money you put into those are coming out of your own income. It's not something that's coming from your employer. Now, some
Right.
employers do allow you to set up an HSA, but you're also able to do it on your own. And so when
Mm,
you put money into those accounts, that also cuts down your tax liability. So
good.
there's different things that go on with those types of accounts. It's a lot of information, definitely. It just varies on what you're doing with it, how you're handling it. It definitely can be a high tax penalty or a low one.
Good, good, good. Well, that's another reason why you need to consult with a tax professional to make sure you don't leverage yourself or overextend yourself.
Definitely.
Okay. Well, we have two questions that I want to take from our audience. How do you pay taxes on stocks if you pull out everything?
That would also vary on what you're taking out because the government, like I said, anything that is a financial institution, everything is getting reported to the government every year. So you'll
Okay.
get a tax document. They usually send them out at the end of January, like the employers.
Mm-hmm.
Sometimes they may not send them out till February. But if you know that you took your stuff out, make sure that you're looking for that document. Whether it's provided online or you're waiting for it in the mail, wait for it because you will have to enter that information because the IRS is already going to have it on file.
Okay. All right. So it's coming. Okay. Another question is, are there any new tax breaks for 2025?
I'm sure a lot of you have heard of Trump's big, beautiful bill, and so many people have so many opinions on it.
Mm-hmm.
Um, as a tax professional, I actually like the bill for the new deductions and things that they provided. It's trying to help people. Like we have no tax on overtime, where if you work overtime, say you work the standard hour and a half pay overtime,
Mm-hmm.
that extra half hour of pay that you're getting on top of your regular pay is deductible, it's non-taxable.
Oh,
So,
wow.
if you work an hour and you get paid $30 for that overtime because your regular time is $20, then that extra $10 of overtime pay, they're not going to tax it. And they got to the point this year they didn't, and I don't know if any of you guys did work overtime and you haven't filed yet, definitely look at it. The employers were not required to put it on a W-2 because it was still a new situation. But a lot of the employers I've seen have done it, and they'll put it's called a overtime premium, or it may say like OTT. It
Mm-hmm.
has different things it could say. I've seen one that said like OMBB, something like it's a whole bunch of different things. So if you look in box 14 on your W-2, it'll have that number, and that's the number that is non-tax. So that number will be entered in your income when you fill out your W-2 section.
Mm-hmm.
It's also going to get entered into what we call a Schedule 1A. So it'll ask you, did you have any overtime last year? And then you'll say yes, and it'll take you to the section that actually put in that number. Now, if it's not on your W-2, you would go by your last pay stub for the year, and you will find your overtime, and you will find the year to date, and you would take that number and you would divide it by 3, and that gives you the rate that's going to be tax deductible. So again, that's something, if you need help with it, you ask the tax professional. They'll know exactly what to do with it.
Mm-hmm.
um, One of the other ones is no tax on tips. So
Oh, good.
some people, like, delivery drivers for like Domino's, or somebody who is a waitress, they get tips. And
Mm-hmm.
so those tips, they get put under, I believe it's box 7, Social Security tips. And they'll have that number there. That full amount is deductible. Now, all of these deductions do have a max level. It just depends on which deduction you're taking. But you get up to a certain amount, which most people aren't making. I think the overtime one is like 12,500. So you have levels to each one. But you put that in there the same way, and it also asks you later on, did you make any tips? And so you enter that a second time. And then there's another one for People who bought an electric vehicle before September 30th,
Mm-hmm.
they get a write off on their. I can't remember exactly what the write off is for, but it's some type of write off. I think it has to do with something that they paid for the car. I just can't remember the exact thing because I haven't come across them yet. But
Okay.
then you have other things like because with regular cars, write offs for I think it's for the interest. It's the interest, yeah.
Okay.
Interest is non-taxable, definitely. That's it. And you have to make sure it was a new car. It will be, I think it's $7,500 you could write off. And then
Okay.
for a used car, it'll be like $4,000. And it's only, like I said, it's up to September 30th for last year. And then it only goes back. I think the used car has to be newer, like 2023 or newer, I believe.
Mm-hmm.
But I had started looking into that stuff last week, actually. So
Nice.
definitely, it's a few good changes going on. But they're definitely trying to push people towards solar living and cleaner environments. So they're trying to credit people where they can.
Oh, that's good.
Yeah.
So if anybody bought a new vehicle, whether they're a business owner or not, they can write off the interest
If it's an electronic vehicle.
if it's an electronic vehicle. So what about regular vehicles? Any tax breaks there? Or...
Nope. The only thing is if you're somebody who's itemizing
Mm-hmm.
and you have a car that you're paying property taxes for, you
Mm-hmm.
can put that in your deductions for your property taxes. But other than that, they don't love us that much.
Got you. So I deal with a lot of veterans as well. Have you encountered anything, tax situations with them that you've had to help them with, or is there stuff pretty
No,
simple?
there's not really much specific for veterans. My uncle is actually a veteran. I just finished doing his tonight right before I got on this call.
Nice.
And my whole family is full of veterans. Like, yeah. So I definitely try to keep an eye out on things like that. Right now, it's nothing really. The only thing I know, not even federal, is they started that whole property tax thing on cars and houses, I believe, for the city.
Right.
Yeah, but nothing federal really. They may have something like if you're a combat veteran for that year. I mean, not even a veteran, but if you were in combat, active combat, like for the
Mm-hmm.
year that you're filing, there's certain deductions depending on what you have. Um, and it's pretty much just targeting the combat ones. I mean, regular, they just treat them like regular employees, honestly.
Okay. Got you. Wow, there's a lot to taxation.
Definitely,
Definitely a
definitely.
lot. So keep good records and make sure if you have a question, you consult the tax professional. Yeah, there's a lot more questions that can come up depending on what your tax situation is, sounds like.
Definitely, definitely.
So those who have been doing their taxes by themselves before this year, they can continue on, or do you think the changes that have happened, they should definitely come in and let somebody else help them?
If they look into it themselves and they're good at researching and learning on their own,
Hmm.
have at it. Like me, I've always been the one that did my own taxes. And so, I'm the type that can go in and figure that stuff out on my own. But some
Okay.
people can't. So, go and see if you can. If you feel overwhelmed, seek somebody. Because I did have a couple people that said, "Oh, I've been filing my own taxes all this time, but now I feel like it's just a lot going on and I need help." So,
Okay. All right. Well, thank you so much. I'm going to take a quick little station break. So when we come back from just a few announcements, I would like you to tell the audience how they can get a hold of you and also maybe any closing remarks that you would like to share with them.
sure.
Awesome, awesome, awesome. Well, I hope that you guys enjoyed that. It's so much to taxation. So I hope that you took something back with you that can, I guess, lead to follow-up questions. Deanna's going to give you her information after this, but I just have a few announcements for you all tonight. Thank you so much for attending. We just invite you to continue to join us on Monday, Wednesday, and Friday at 7 a.m. for our Jumpstart Prayer. The warriors have been coming through, and we are going to continue to pray without ceasing. Also, every Sunday, our worship experience starts at 11 a.m. So if you don't have a church home, make sure you come join us. Also, I want to invite you to join us each Tuesday night at 7 p.m. for our midweek impartation. I'm telling you, it is a treat. You don't want to miss it. It's held at 2510 Build America Drive in Hampton, Virginia. Now, if you don't have a way to keep in touch with us yet, you can text the word empowered to 757-500-0940, and you'll be able to connect with Bishop's Corner, and you'll receive weekly updates and words of inspiration. And also, if you would like to keep up with our prayer team, you can send in your prayer requests, get reminders about Jumpstart Prayer. You can text the word Jumpstart to 757-500-0940. We want to connect with you, and you can also share this information with your friends and family so they can be inspired and also be on the prayer call with us as well. So I'm going to bring back our guest for her final remarks, and also she's going to share how you can look her up for services. Don't be the one who's struggling this tax season. You got the resources right here in your hands. So, Deanna, back to you.
Hi again. Thank you guys for listening. Like I said, I'm all for helping people. I've grown up with a heart of giving, so I definitely try to help out where I can. Um, Basically, my information, you can find me on all social media. I'll actually show you guys the back of my business card. Was looking for my flyer, but I don't have it downloaded. Um, so let me see. So you guys should be able to see my screen. And
Yes, nice.
basically some of my contact information. If you would like, you could scan this QR code while it's on your screen, and you're able to put your contact information in, and I can reach out to you to find out what your needs are. Consultations are completely free, and so if you just want information, just reach out. I'll go ahead and call you next week. My phone number 757-453-5171. You can find me on Facebook and Instagram. This is my Instagram handle, the Daniels Touch with underscores. But you can also just look up the Daniels Touch and you'll find it anyway. So it'll be like that on Facebook and on Instagram. Also, you can email me at thedanielstouch@gmail.com. And then I do have a link tree with a few links up there, but I'll tell y'all, reaching out to me on Facebook, I got so much more information on Facebook. You can also follow my personal page under my name. I put a lot of tax tips, bookkeeping tips. I even put travel tips up there sometimes for my other business. So definitely feel free to add me, follow me.
Excellent, excellent, excellent. Well, we so appreciate your time. I know that there already are people who will be reaching out to you because they did have questions before we got on tonight. So I also would like to thank our sponsors, our leaders, Bishop Gary Rogers and Pastor Lisa Rogers, all of our guests and viewers for making tonight possible. And just make sure you join us right back here next month where we will embark on another great topic right here on the Hub. You all have a great evening. And if you're in Hampton Roads, be careful in that snow. They told me it's snowing. Thank you again, Deanna.
Have a good night. Thanks for having me.
Good night, everyone.